a side that you don't know. I can't wait to get you all alone. Once I'm in, there ain't no letting go. My mind games until you lose control.
Good morning, ladies and gentlemen. What's up, traders? What's going on? Welcome back and happy Money Tuesday. I'm excited to be here, guys. I'm excited to get to work with you and just rock and roll today. Have an amazing day like we had yesterday and just keep this momentum going. We've had so much positive, great momentum since September. We let that bleed into October. We all had a phenomenal month of October. It was killer. And so far, we're having a really awesome start to November. Again, just month over month, replicating these results, right? Just doing what works and coming in with the right mindset every single day and just really just doing what it takes to be a great trader. Be super disciplined, very patient. And it's just been an amazing couple of months. We've had a lot of great momentum building up since September. All that momentum's bleeding into October, November. And so I'm just excited to see what today has in store for us, guys. It's Money Freaking Tuesday, November 7th, 8:30. And we're officially starting the pre-market rundown, where I take this time over the next 45 minutes to get you guys prepared for the day. Give you guys, my outlook. What are my expectations? How am I looking to come in, navigate the markets, and make money in the market? What are my game plans? What stocks am I looking at? My top penny stocks, my top options, my personal game plans as far as how I'm looking to execute today and lock in some profits. I'm going to be sharing that with you guys over the next 45 minutes during the pre-market rundown. So let's get prepared. Let's have some fun. And let's rock and roll, guys. But before we dive into it, you guys know the drill. Come on now. Every single freaking morning at 8:30, hit me with that big old alpha day trading. Good morning. Look at April. She's ready to go. Good freaking morning, April. Christy, Trader Adam, Cole. What's up, brother? Mr. Steve, how you doing? The Sizzler's inside the chat, holding it down. He's ready to rock and roll. Corey, Tim, William, Johnny Holmes, Joey, Kevin, Trader Adam, Lucian, Jonathan, Zach Attack. My goodness, there's so many traders here today. What is going on, everybody? Hopefully, you guys are having a wonderful Tuesday morning. I hope you guys are ready to attack this market. We have a lot of phenomenal opportunity today. Across the board, we got some great opportunity with the SPY. We'll give you guys the game plan. QQQ looking phenomenal. Most of my focus today goes right here with the Qs. Apple looking fantastic. We got to give you guys the breakdown over on Apple. Tesla looking pretty decent. NVIDIA coming on up. And then a few back burners as well, such as Lowe's, Datadog, Uber, and Shopify. So we got a big watch list today. 3 of our top option plays are going to be Apple, Tesla, and NVIDIA, followed by the 4 back burners. That's Lowe's, Datadog, Uber, Shopify. Give you guys the game plan on that, and then really spend a lot of the time breaking down the Qs. What do I see? What do I like? How am I looking to trade the Qs today? And then give you guys the game plan on the SPY as well. But today, based on location, based on opportunity, I see the best opportunity here at QQQ today over the SPY. So just go ahead and set those expectations. My focus here on the Qs, right? Not so much on the SPY. And that's how we're going to rock and roll today. Craig, what's up, brother? How you doing? And then over on YouTube, what's up, everybody? How y'all doing today? Hit me with a big old good morning if you guys are over on YouTube right now. Who do we got over on the tube? You got Tom, Rick, Eric, what's up? Terry, Brent, BK, and then Steve holding it down over on the YouTube. Appreciate you, boss. Good morning, everybody. Welcome to the pre-market rundown. Let's have some fun. Let's get you guys prepared for today's trading session so you guys can come in confidently, strategically, ready to attack this market and just put the odds in your favor of having a successful winning day. All right, so let's go ahead and dive right into it. Jerry, what's up, brother? Good morning as well. So as always, we start with the economic calendar just to make sure you guys are mindful about what we have going on for today's trading session. Can't tell you how many times I get hit up saying I just lost, 80% of my account today. The market moved 5 points out of nowhere. Don't know what happened. I'm like, what time did you take a trade? They're like 10 o'clock on Tuesday. I'm like, well, you had Jolt's job data at 10 o'clock on Tuesday. They're like, what's that? I'm like, well, if you're going to be trading the market, you need to understand daily, you look at the economic calendar to understand what's going on. What kind of economic events do we have dropping and at what time, so you can manage your risk accordingly and mitigate your risk and maybe flatten that position ahead of key economic data. So we always start with the economic calendar, make sure we're mindful of everything happening today and at what times that these things are going to be happening, so we're prepared, we can be great managers of risk and not find ourselves in a situation where we get completely wiped out of a trade. And this only takes like 60 seconds to review on a day-to-day basis. So getting that, consistent habit of just looking at your economic calendar every single day, especially if you're trading large caps. If you're trading penny stocks, not really a big deal. You're not going to see an impact with penny stocks. But if you're trading the SPY, the Qs, large caps, you got to be mindful of what's going on every single day. And like I said, it takes 60 seconds to review this and another 5 seconds to get those charts marked up with those timestamps, so you're mindful. So what do we got going on today? Today's another pretty dry day as far as what we got going on. The only big thing that we have is a lot of Fed members speaking today. So at 9:15, you have Fed Barr speaking. 9:50, you got Fed Jeffrey speaking. At 10 a.m., you do have Fed Waller speaking. And then here at 12 o'clock, you got Fed Williams. And then here at 1:30, you got Fed Logan speaking. So you got a lot of Fed members speaking today. And I would say over the past 18 to 24 months, like maybe 10% of the time when we have a day full of Fed members, maybe 10% out of the last 24 months, have we seen a big reaction to the market, right? Where a Fed member speaking, a Fed member makes a remark, says something, and the market just rips 2 points or drops 2 points, right? A really big reaction. It's rare that we see that. Be mindful of these times. But it's rare that a Fed member speaking, besides Jay Powell, that really moves the market. Now, we do have Jay Powell speaking the next 2 days. We got Jay Powell speaking tomorrow at 9:15. You got to be super mindful of that. Whenever Jay Powell speaks, the market moves. And then here on Thursday, towards the end of the day at 2 p.m., you do have Jay Powell speaking again Thursday at 2. So you got to be really, really mindful of that. But like I said, it's rare that you see the market really move and rip to the upside or dump to the downside when you have, Fed members speaking besides Jay Powell. So be mindful of these times, but I wouldn't say that you necessarily have to be like completely flat, or you're probably going to be flat the entire day. So just manage your risk, put hard stops in, be mindful that you do have Fed members speaking. Something could happen. It's rare, but something could happen. Stops in the system, finger on the trigger, just mitigate your risk and be smart about today, guys. All right. But other than that, just a day full of Fed members speaking from 9:15 to 9:50 to 10 o'clock, then at 12 o'clock, and then at 1:30. And that pretty much wraps up and concludes the day. All right, but let's go ahead and dive right into the Qs, right into the SPY, give you guys my game plan, my outlook, my overview, and really set some expectations regarding how am I looking to come into the market today and how am I looking to attack the market today. And I do this every single morning with you guys. Yesterday, I gave you the line in the sand on the SPY, the make or break. And that was that zone between 435.85 and 435.90. Only had one trade yesterday, and that was the false break through that zone, right? We broke it. We never held it. That was a false break. Came back up and retested it with a lower high. That's where we got short right at the start of the day, right off my line in the sand, my make or break. So don't take these lightly. When I give you guys a line in the sand, that is a freaking make or break. 90% of the time, you see a great trading opportunity take place off those lines in the sand, right? And you had two back-to-back killer trades yesterday off that line in the sand. So let's go ahead and give you guys the line in the sand today for the Qs. You got a couple of these lines in the sand on the Qs, but the Qs look phenomenal. I like the Qs a lot. So you got a pretty big window of overhead resistance here on QQQ off the daily. And I'm really just going back and looking left. I can see that we have a lot of prior support at this zone. You could take this further back as well and get multiple touch points. But I can see here recently we've held this area as a lot of support, a lot of price development and price action at the zone. And it just so happens to be yesterday's close and yesterday's high day as well. So this is going to be a valid zone. Now, that not wouldn't necessarily just be a line in the sand for that one reason, right? It's not like one of the best zones I've ever seen. It's a pretty solid zone. I'm going to keep it on high watch. But what really validates this zone? Not just that zone that's been hit several times, not just yesterday's close and high a day, which is a key area, but it's also this multi-month downtrend here on the Qs. So you have some confluence, right? You have this multi-month downtrend. Every time you hit the downtrend, you get rejected. Hit the downtrend, you get rejected. Hit the downtrend, we could get rejected, right? Now, if it was just the downtrend, I wouldn't really classify this area as a line in the sand. But since we have multiple layers of confluence at this downtrend and that daily zone, that really validates the zone for me today, making this my line in the sand, that multi-month downtrend and that zone of overhead resistance. So my line in the sand is this zone between 369.20 and 369.78, as well as this multi-month downtrend that falls right in the middle of that zone. So if we had to really try and pinpoint at what price is this downtrend currently sitting at, we can see it's sitting at like 369.48. That's right in the middle of the zone. And check it out. You hit it yesterday, got rejected. You're hitting it again today in pre-market. You see that it's being respected. So the simple fact that it was validated and respected yesterday, and it's being respected again today, makes me really want to keep that trend line on high watch. And it's right at that daily zone of resistance as well, making this area and that downtrend my line in the sand, my lits. Okay, that's the make or break today on the Qs. All right. If we fail to break the downtrend and really push through this zone and hold on up, we're not taking calls. If we fail to move through that zone, break that downtrend, and I see a nice little pullback into that zone and we have good price development. If we fail to do that, I'm playing puts, right? If we cannot break this zone, if we cannot break this downtrend, this is a great area to be looking to short the Qs for the next leg down, right? It's a very great low risk, high reward opportunity, right? You would literally just put your stops over that zone, over that downtrend, look for entries right inside that zone at that downtrend if, you know, there is a great opportunity that presents itself and we have multiple separate reasons and you have potential all the way back down to yesterday's lows, right? That's just your first target. Then we got a gap that could get filled down around 364.50. So look at this. I mean, it all comes down to nailing this entry, but if we have a good solid reason to get short, we can't break that downtrend, we have good price development at that zone, and we have multiple reasons to get short, we already know that this is going to give us great low risk and substantial reward to the downside. It's nearly a 6-to-1 risk reward right off this key line in the sand on the Qs and right off this multi-month downtrend as well. That is the make or break. If we do not break this downtrend, if we do not push through the zone, I'm looking to play put contracts today back down into these lows. That's my main target. Now, there will be some pit stops along the way down, some additional profit targets. That's my main PT down here off these lows. That's a 6-to-1. But you will have some support right up against these lows from yesterday. That would be price target number 1. It just so happens to be pre-market lows as well. So that's going to put you right around like 368. So like 368 would be your first price target back into these lows from yesterday. Just so happens to be pre-market lows as well. Then our final price target is going to be back down at yesterday's low of day here on QQQ. And so that's going to be the short plan today. Once again, if we fail to break through those two key levels of resistance. Now, what if we do see a strong breakthrough, that zone of resistance and that downtrend? Well, that shows a lot of strength, right? That's pretty bullish. Then we'd just be looking to see how we pull back into the zone, what price does, how price develops, and do we have multiple reasons to get long? Just because it breaks that zone and starts to pull back into that zone doesn't necessarily mean it's an automatic long entry. But we definitely have a good high probability trade in front of us. But how many other separate reasons do we really have? Well, we'll come to find out what those reasons are when the market opens, if we even see this setup in the first place. But basically, to keep it simple, if we push through this zone and stay above this zone and see good price development, and we have those multiple separate reasons to take a trade, that's going to be some indication for me to get long for the next leg up into this next daily zone of resistance between 371.15 and 371.41 here on the Qs. Again, that next overhead zone of resistance, which would be my profit target to the long side, would be 371.15 to 371.41 here on QQQ. So we got our long plan in place, right? What we want to see, how we want to see this develop and set up. We got our short plan in place, what we want to see, how we want to see it set up and develop. So again, we have our opposite plan in place just in case. We know what we want to see to get confirmation to play calls. We know what we want to see to get confirmation to play puts right at that line in the sand. QQQ takes priority on the watch list today over the SPY. The Q's location, based on where the Q's are at, looks phenomenal compared to the SPY. So I'm putting more of my focus here on the Q's today. Okay? Do we have any questions regarding the Q's, the breakdown, the analysis, my line in the sand, these zones, and my game plans before we move into the SPY? Mark on the tube. What's up, brother? Good morning, Benjamin. Good morning. Jerry, what's up, dude? Good morning as well, Jerry. So yeah, let's make sure we don't have any questions before we move on to the SPY. Again, we got a lot to talk about today, so we're just jamming, right? We're not wasting a lot of time. We're not lollygagging, all right? Josh ain't ranting today. We're hitting it hard on the head, moving forward quickly, but yet efficiently. Make sure we have an opportunity to talk about everything this morning. Hi, beautiful. I love your dress. You want to pull hard, pull hard. Pull. You can pull, so pull. Huh. Harder. Need help? Yeah? Sorry, guys. All right, cool. So let's dive into the SPY. Okay, the SPY, the line in the sand I gave you yesterday is the same line in the sand that I have for today. The same zone that we were playing puts off several times yesterday. That zone is between 435.85 and 435.90. That is my line in the sand today for the SPY. That's really the make or break as far as do we get that next leg higher into this next daily zone of resistance between 437.14 and 438.14, or do we run back up into that zone again, get rejected, and then start moving lower to possibly close this daily gap here on the SPY. So again, you can look at the SPY. We got some work to the upside. We may not even get there. We may just start dropping on off. So the reason why I like Qs more than the SPY is because the Qs at this point in time will be opening at the zone. So there's a make or break opportunity on the Qs right at the start of the day, and we have a couple other key areas on the Qs that we don't necessarily have on the SPY. The Qs, the location, and the technicals look a lot better than the SPY. So that's why I'm putting all of my focus on the Qs at the start of the day. The SPY, it's got some work to do to get back up into that zone before we really see an opportunity present itself. Okay, if we ever see the SPY back up at that zone that we were trading short off yesterday and we fail to break it again, that's going to be an area where I start thinking about playing puts on the SPY back down into yesterday's low of day. And then I'm going to start targeting this daily gap between 433 and 430.92. So we could see the SPY start to close this gap to the downside today into the coming days as well. And it really comes down to what is the SPY going to do up at that zone of resistance, that line in the sand from yesterday. It's still a pretty key significant level for me to be watching today on the SPY. If we get rejected, we have a good short opportunity. We're looking to play puts back down into yesterday's low of day, right around 433.72. Then we're looking to see if we can come on down to that 433 region. And if we ever see the SPY fall below and stay below 433, we can see the SPY fall to close that daily gap down at 430.92 here on the SPY. Really comes down to that overhead key zone that we were playing short off of yesterday. Now, if the SPY breaks that zone and holds that zone, then that's going to be the opportunity where we want to be looking to play some calls, right? All the way up into this next daily zone of resistance between 437.14 and 438.14 today here on the SPY. But again, we got some work to do, right? If the Qs fail to break the zone in that trend line and we start to drop, let's be honest, the SPY is not making it up to that zone. The SPY is going to start to drop as well. So that's why I like the Qs based on location and technicals and the opportunity that could really be presenting itself right at the start of the day. So all of my focus here on Q, and I'm sorry, Tim, I know that's not what you want to hear, but that's the opportunity in front of us today. All right, but I guess the cool thing is, you get great correlation between the two for the most part. So if the Qs start dumping and you see a great setup on the SPY, at least you have some extra confirmation that the Qs are dumping looking weak, and that could be the confirmation you need to get short on the SPY as, these two correlate really closely. But again, 80 to 90% of my focus on the Qs today. I apologize, Tim. But we'll definitely take a peekarooski at the SPY, see how it's moving intraday in comparison to the Qs. If I'm shorting the Qs, making sure that you guys have some exposure across the board, make sure we can absolutely take advantage of this market. All right, so number one is the Qs. You guys understand why. Number two is the SPY. You guys understand why Qs take priority over the SPY. And you guys are fully prepared with the long plans and the short plans, my expectations, and how I'm looking to come into the market today and make some money. And really just comes down to putting all my focus here on the Qs, really watching how price reacts and develops at the start of the day, at that line in the sand area. And we really just go from there. But I do think we have a really, really good trading opportunity at the start of the day here on QQQ, guys. Alrighty. Let's go ahead and move into some of the top option plays for the day. All right, you got a couple things with Apple. If you're looking for Apple to have a continuation to the upside, like you saw yesterday, all you need to see Apple do is break and hold above 179.22 to 179.43. People ask me all the time, Josh, what do you mean continuation play? How do you trade the continuation? Well, it's pretty simple. You have a solid green day, and let's say you get a slight gap down, but you think we can continue higher. That was the case yesterday on Apple. All you're looking for the stock to do is break and hold the prior day's close and high a day. So yesterday, we were just looking for Apple to break and hold 176.65 to 176.82 to get confirmation that we could see that continuation move to the upside. What did Apple do yesterday? Well, we broke that zone, we held that zone, then we ripped to the upside. That was the indication that we could see that continuation move there on Apple. Same thing today, right? Let's say we get a continuation move to the upside into the 182s on Apple. What do you just need to see? It's pretty simple. It's pretty straightforward. We just need to see a break and hold over this zone. And that zone was created from yesterday's close and yesterday's high a day. So that zone here on Apple is between 179.23 and 179.43 here on Apple. If Apple breaks that zone and holds that zone like we saw yesterday, that's going to give us indication that we could see that continuation move to the upside. How much higher to the upside could Apple go? Well, I'm just looking at these prior swing highs right here. That would put us up towards around 181.94 to 182.38. So just call it 182 would be the next main overhead level of resistance here on Apple, guys. Okay? And again, if we're just looking for that continuation play, we know what we want to see, a break and hold above that zone, and then get some confirmation that we can see this momentum continue into today for the next leg up. And we have about $2.50 of upside potential here with Apple. Right, that's the long plan. But what comes next, baby? The short plan, right? Have an opposite plan in place just in case. And we do have a really good short opportunity today on Apple as well. Right? If we don't break and hold that zone, we're not going to see the continuation play today. If anything, we may see Apple crack this uptrend. We're inside of a bit of a wedge. Okay, if you really look at Apple, we're on a downtrend against all of these lower highs from yesterday. We're connecting in pre-market, so we do have downtrend resistance, and we have uptrend support from Friday's low of day, yesterday's low of day, and we have a connection point here in pre-market as well. So that puts us inside a bit of a wedge formation here on Apple. We're getting very tight in between the downtrend resistance and uptrend support. So that could ideally be a leading indication that we get that momentum move to the upside, right? If Apple comes down and hits this trend line and breaks the downtrend, that's going to really start giving us indication that Apple could break and hold that zone and continue higher. That's going to look great for calls, right? But let's say Apple is unable to break downtrend resistance and we crack that uptrend. Well, that's going to give me confirmation that, hey, we're probably not going to see that move on up. We're not going to see momentum carry through into today. We're probably going to see Apple pull back. I want to be looking to play puts if we ever see Apple coming through and cracking this uptrend. And it's a multi-day uptrend. It's a valid trend line here on Apple. If that trend line ever cracks, right, I'm looking to play puts here today on Apple. How low could we see it go? First target back down into these lows from yesterday. So your first target's going to be between 177.90 and 178.03. Then you could see Apple all the way back down towards this lower zone of support between 176.65 and 176.82. Those are your two lower zones of support, which means these are going to be your two profit targets for today to the short side if we ever see that crack of the uptrend and we get that confirmation to look to play puts. Okay, so we got our opposite plan in place. We have our short plan in place because that very well could set up. We don't want to come in biased and say, it only looks good to the long side, let me get long, and you just missed the entire short on down. Have a short plan in place, get convicted, be confident, and all you have to do is simply react to the market when it gives you opportunity, right? You have a plan in place to the short side, you have a plan in place to the long side. All you have to do is just react when the market gives you the opportunity, right? If it gives you opportunity to the long side, react. If it gives you opportunity to the short side, react. That's all you have to do. You already know exactly where we can see the market go. You're that much more prepared than 90% of traders that don't come in and actually take the time to build those plans, those what-if plans. What if we see that long setup? Well, this is exactly what I want to see, and I know how I want to trade this. What if we crack that trend line? Well, I know exactly what I want to see and how I want to trade it. It takes me like 10 seconds to build a hypothetical plan. Worst case scenario, guys, is Apple does this all day. And you're like, okay, well, there's no trade. You wasted 10 seconds of your time to build those plans, right? But if Apple sets up, you don't have to scramble and fumble and build a plan and maybe hesitate and be late to the trade. All you have to do is react. And that's what we're here to do, is react to the market when it provides us with opportunity. So let's make sure we're simplifying the process, getting prepared, so when that opportunity presents itself, we are able to simply react. Worst case, it does nothing. You wasted 10 seconds of your time to get prepared. Super simple stuff, all right? Do we have any questions regarding Apple, the analysis, and the game plans for today here on the good old Apple? Do we have any questions? If you guys are on TikTok, come over to YouTube for the pre-market rundown. The links are in my bio. And then I saw a few comments coming through saying, hey, do you have a Discord? We do not. We built our own software. And then I saw a few comments saying, hey, how do I join your Discord? Well, hey, we have a trading education program. And so if you want to learn more about our education program and the software and the application that we developed to use in place of a Discord, and what we do that's different compared to anybody else in the trading space, and you just want to learn more, go click that link in my bio. Go down to where it says Market Mastery. It takes like a couple of minutes to learn more. That's it. And if you want, you can book a call with one of our coaches, and maybe it's me on that call as well, to get to know more about you. You can learn about the program, come prepared with questions, and at least get some information to be able to make a decision on, hey, is this program a good fit for me right now at this point in time? Because I want to learn how to trade. I'm ready to overcome these mental challenges. I'm ready to excel. I'm ready to make it happen and crush my goals. If that's you, takes a couple minutes, link in the bio, learn more, book a call with one of our coaches, and we'll make it happen. Look forward to having a conversation with you guys. All right. So that's the game plan on Apple. All right. That's the game plan on Apple. And so that, it looks fantastic. I like Apple a lot. This one takes priority on the options watch list. This is number one on the options watch list, just like the Qs is number one. So I'll be putting a lot of focus on the Qs at the start of the day, putting a lot of my focus here on Apple. at the start of the day as well. Everything else I'm going to classify as a back burner because these two stocks look phenomenal, right? I don't need to have 10 stocks on my watch list and have a lot of distractions and a lot of noise. I got two stocks that look great. I know that one of these two are most likely going to give me a fantastic trading opportunity for the day. So I'm just going to sit back and observe these two and wait for the opportunity to present itself versus missing trades because I'm too busy scanning 100 stocks. Doesn't make any sense. So simplify the process, get your head off of a swivel, and keep it simple. So here with Tesla, a key area that I do want to be watching today on Tesla is this zone between 218.43 and 218.66. That was a key zone that we were watching as of yesterday for a possible bounce. It was also our target to the short side. Remember, we were shorting Apple from 226, and we had our first target down in the 218s. That was that zone of support. That target got hit. We even moved lower, but that's still a key area to be watching for today. A lot of resistance here on on Thursday. All of that daily support from Friday. We had good price reaction and developments at that zone yesterday. We can see that it's a key area on Tesla. That's going to be my line in the sand, my make or break today on Tesla, just because of how well this zone's been respected over the last 3 trading sessions. So if Tesla is trading above this zone, you want to be thinking calls, okay? If Tesla falls back below the zone and stays below the zone, you want to be looking to play puts, okay? So puts below this zone, your target's going to be yesterday's low of day. Put you right around like 215. But if Tesla holds this zone as great support today, where can we see Tesla go? First target, right around 219.77 to 220. That's going to be your first target, back up into some of these highs from yesterday. And its psychological resistance at 220 as well. Then we just look left and start targeting these highs from yesterday. Those are going to be all of your other targets to the upside. Just looking left over the past couple of trading sessions, looking at these prior highs, what we've hit as a resistance and then proceeded to drop lower. Those are going to be your next overhead areas of resistance here on Tesla. You know your line in the sand. Your line in the sand. Your LITs is this zone between 218.43 and 218.66. That is your make or break. If Tesla, once again, holds that zone, right, we see good price developments, and again, multiple reasons to be getting long. Let's get long. We know we have some great upside potential today back into these prior highs, okay? But again, we always want to have the opposite plan in place just in case. What if Tesla opens, cracks below that level, and then retests it as resistance, giving us a nice lower high opportunity? We will simply look to play puts for the next leg down. Where to? The low 215s back into yesterday's lows of day. That is going to be the game plan here on Tesla, and that is going to be your line in the sand, your make or break if you're looking to trade Tesla today. NVIDIA's got some time, guys. I don't know if NVIDIA is going to hit my level today for puts, but if it does, I at least want to give you my key area that I'm watching. Number one, we do have this key daily zone of resistance between 461.03 and 463.22. Not only that, but it's going to be back up into this multi-month downtrend. So just like the Qs are pushing into key resistance and a multi-month downtrend. That's a make or break for the Qs. That's also a make or break here for NVIDIA. So if NVIDIA ever gets up towards around the 462s, maybe the 463s, that's going to put NVIDIA at that key zone on the daily, as well as that multi-month downtrend. If we see NVIDIA push on up and we have good price development at those two key areas, that's where I want to start thinking about getting shorts here on NVIDIA for a day trade that could turn into a swing trade opportunity as well. So definitely be watching that overhead zone of resistance on NVIDIA. It may not get up there today, but it's still on watch over the coming days to see if we ever have an opportunity to get short here on NVIDIA, guys. All right. Other than that, if you guys trade like the Home Depots and the Lowe's, the only thing that I want to point out with Lowe's, LOW, is this possible daily gap to the downside. That's about it. If we ever see lows fall below 193.30, and you guys like trading a stock like LOW, you have potential to drop about $1 to the downside and close this daily gap. Okay, so that's going to be trade idea number one, is if LOW falls below 193.30, you could look to short this down to 192.23. That's a little over $1 to the downside, and that's a simple daily gap fill opportunity, number one. But number two is, let's say LOW is not able to fall below and crack below 193.30. Let's say we hold that level again today with some strength. It is very possible that we see a nice big bounce at 193.30, right? It's very possible you don't see it enter the gap level. These gap levels like to hold up as great areas of support. We could see the area hold up as support. But when we crack that level of support, we have an 80% probability that we get that gap fill. But that's the thing, is like if we don't crack below this 193.30, there's no reason to get short. If we hold that level and see a big bounce, we could see this downtrend get broken here on LOW for the next leg on up. And that's very realistic as well. That's definitely a great plan to have established here on LOW, right? It may not crack below and enter that gap zone, and you may not have an opportunity to take the short for a daily gap fill. It may give you a higher low break of this downtrend, and you may see the next leg up today. So have that long plan in place just in case. But where can we see LOW go? I would say your first main area to the upside is this zone between 195.40 and 195.67. Then all the way back up into Friday's high of day. I'm sorry, that was Thursday's high of day, and then Friday's highs as well. That would be the next overhead area of resistance here on LOW if we do indeed get long today. That's going to put you up between 196.67 and 196.96 here on LOW. If we ever see a break of that downtrend, that would give us some confirmation that we could place some calls for the next leg up into these prior levels of resistance if we don't see that short opportunity for the daily gap fill present itself. So this is going to be a bit of a back burner for me, just because Tesla looks good, Apple looks phenomenal, Qs look exceptional. You know, this is okay, but it's definitely not taking priority on the watch list by any means. It's decent, right? But I do want to keep it on watch to see if we do get a setup today, whether that's long or short. It's sitting at a pretty key level, so I do want to watch LOW for today. You got Datadog up off earnings. Datadog has a gap to fill to the upside if you're watching DDOG. The last thing you really want to be doing after a stock reports great earnings and gaps up is shorting against it day one. Typically, the first day after earnings, you get a continuation push to the upside. Then you can start looking for a short. So if you're like, hey, Josh, I want to get short on Datadog today, I mean, go for it. If the opportunity's there, the opportunity's there. But, you know, when you see a massive gap up off earnings, typically that day of when we open, we get a continuation push in the direction in which we open. We're gapping up. It's very possible we push a little bit higher today. Then we can look for a short. Just like to the downside, when you see stock gap down, you most likely get continuation to the downside the first day after earnings, right? That's just what you see 70 to 80% of the time. So knowing that, like, let's stay away from the short unless the short is too good to pass up. Let's look for a possible long opportunity on Datadog. And what's the long? A daily gap fill to the upside. If we can see Datadog, breaking and holding 101.98, you could see that daily gap get filled up towards around 104.76. That's $2.76 of upside potential here on DDOG to close that daily gap. This one looks pretty freaking good as well, and I want to be watching this one today to see if we get that continuation push to the upside off this massive earnings gap up here on DDOG, and we can see that there is a lot of great opportunity. One other thing I want to point out is you may have a trade well before seeing it get above that gap level if we even see that take place. And you're like, okay, well, I like the gap opportunity. There's like $2.70 of upside, but now you're saying there's an opportunity to maybe get long well before 101.98? Absolutely. What comes first below 101.98? $100 psychological resistance. That is a key area. In my opinion, $100 carries a lot more weight than these daily levels. I mean, these are still pretty significant points that establish that gap, but $100, that's a key area of support resistance. So if we see a strong break over 100 and you see good price development at $100 as support, that could give you an opportunity to get long off 100 up to that 101.98. And if we do see that gap fill, you're putting an extra, what, $2 of reward in your favor by looking for strategic entries at 100. If that's the opportunity that we see, you could already be in at 100 compared to that 101.98, still see the opportunity to close that gap, and that gives you a solid $4.76 of upside potential. So there is still an opportunity to get this long for a break and hold over 100 and then target that daily gap fill at 104.76 there on Datadog. All right, guys. So that's my watch list for today. All right, we got Apple looking beautiful. Got Tesla looking pretty good. NVIDIA, more of a back burner just because it may not take place today. Lowe's looking pretty decent, right? We got a couple great opportunities here. And then Datadog looking pretty sexy as well, followed by the best of the best. That is going to be QQ to the Q. All right, let's do this. Anthony, Kevin, Zach, Stir, Brandon. What's up, guys? Good morning. How we all doing? If you have any stocks on your watch list, let's review them. If there's anything that I did not discuss that you're looking at, let's go ahead and talk about it. Let's make sure you guys are prepared yourselves. And then if we have some time, we'll review some other stocks as well. What's up, brother? Yo, 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 yo. How you doing today, boss? Woo, I like it. And you're feeling pretty good yesterday. I saw you came back and you, what? You made like $500 yesterday? You slept through the chop, you came in at the right time, and I guess you took some puts. I love it, dude. So isn't that your biggest single day yet? $500? So this was slightly below the biggest day you've had, but another really solid day, man. How does that feel? And most traders are like, I want to be here to make money, so let me trade when I'm sick. You're like, nope, let me go get doped up on medicine and come back later if I feel good. I like it, man. So but you did the right thing, man. You disconnected. You got your mind right. You felt better. You came back strategically, and you had a really good day. And let's be honest, like yesterday was what? Was it a challenging day for you, or was it kind of easy to make that money yesterday? It was easy. So it's like you can replicate that day over day if you really wanted to, right? Exactly. So that's the goal. It's like you've had some really solid days. You had a really good day yesterday. Reflect upon those trades. What did you do right? What really drove your success? And let's replicate it, man. Now we have a baseline, $400 days. You're like, okay, well, hold on. Let's baby step it. That's 100% more than my goal. So, but let's get there, man. We can replicate it, and let's get you to that point, man. I'm super excited to help you do that. You sound beautiful, in my opinion. You sound great. What's up, everybody else? Do you have any stocks on the watch list that we need to review? Zach Attack, what's up, brother? How are you feeling today? You feeling pretty good? Feeling great? You had a pretty good day yesterday too, right? Good stuff, man. Good day, simple day, not challenging. So again, same thing, man. Always take the time in the morning before you start your day to just reflect upon the prior session and pull the good out. and just project that into today. If yesterday was a simple day, not a lot of challenge because you followed your system, you honored your rules, you checked off those criteria boxes, and you happen to have a really good, successful day, just make sure we're doing the same thing again today. Replicate that success, man, and let's have another profitable day in the market. Cole wants to look at Amazon. Let's look at Amazon real quick. AMZN. I was looking at this one this morning. I do believe it's starting to top out for a possible pullback. That's just what it looks like to me along this big push on up, and how we're starting to kind of see it slow to the upside. We're starting to see that rounding effect, that curling effect. It's a little too early, but it's starting to look like we could maybe have a short around the corner. But what I want to do on Amazon is I'm going to mark up this entire zone right here of resistance, and I'm going to pull that all the way up into yesterday's close as well. So we have this low before the gap down, this push back up to close the gap. This is initial gap zone that was filled. We also see that it was resistance here on Friday, and it was yesterday's close as well. So that's going to be an area that I want to keep on watch. I don't know where Amazon's at this morning. I don't know if we're below it or above it. But we'll go see here in a moment. And then you can see there's going to be an uptrend here that you'll probably see a little bit better on a lower time frame. It looks like you may be stair-stepping your way up over these past few days to where you might have a solid little trend line to throw up underneath these lows, and you do. Look at that. So again, go back to Thursday. You got a few points off the trend line. You connect on Friday. You validate yesterday. So that's going to be a key area, and you're pushing above that zone here on Amazon. So you may see that continuation push to the upside, and that trend line is right in line with that zone of resistance. So here's what I want to do now. Knowing that we're pushing above it, I feel like we can strategically tighten this zone because it's a pretty wide zone right now between 139.25 and 139.47. I think we can strategically tighten the zone here just a bit and put it around 139.38 to 139.74. But let's go back and look at the last couple of days and make those, fine-tuned adjustments. Let's start with like an hourly. Let's go back and see if we can just really fine-tune this level here a little bit. Yep, right up against those lows. That looks good. Let's go back and look left. I'm not crazy about it. Let's just pull it up into Friday's high day and yesterday's close. And let's just run off those 2 points. I think that's a pretty tight little zone here. That looks a little bit better when I look at price action yesterday at the zone, at the lows, at the highs. Yeah, that looks to be a little bit better. And we're running it off Friday's high a day into yesterday's close. So the zone that I feel the most confident in for myself, just doing this analysis, would be this little zone right here between 139.49 and 139.74. And it's right in line with this trend line as well. So I would ideally, if it were me, would love to see Amazon come into that zone, come into that trend line, and look for some really nice low-risk entries off 2 solid areas of supports. That may not happen, though, because it looks like we are breaking yesterday's high. So that's going to be game plan number 1 on Amazon. If we do indeed see the pullback into that zone and that trend line and we hold on up, that would be a great low-risk area to get involved for the next push higher. Okay, stops would be below the trend line and stops would be below that zone. But here's the deal. We may not even get back down into that level because we are currently breaking all of that resistance from yesterday. So that zone from yesterday is between 140.55 and 140.74, and that's going to be your current make or break. I'm going to label that the line in the sand here on Amazon, right? Because if Amazon comes back below that zone and holds below it as resistance, you already know you're coming back down into that uptrend and that daily zone of support. You could look to short Amazon if we fall back below that zone and hold below that zone as resistance. You can look to short this back down to like 139.50 into that daily zone of support and that trend line, right? Get out of your short, And if it starts setting up long, then you could look to play it long back up into that zone. And then maybe for that continuation higher. There are a couple of different ways that we could look to trade Amazon here today. That's if we fall below the zone. We could look to short it into support and then look to see if we have an opportunity to get long off those levels of support. But if we hold that zone on up, we can see a continuation push to the upside today. Where could we see Amazon go next? That's the $1,000,000 question, ain't it? If we knew exactly where the sucker was going, we could just load the boat. Load the boat. You got this gap up here. That would be a pretty good target, actually, that daily gap. Up between 143.62 to 144.52. You're on Amazon. Like, will you have some pit stops? You will have some pit stops. And here's one other thing that I noticed. You can take that zone, draw that all the way back, and you can see that you got even more validation off that zone. Not just all of that, price action and high day from yesterday, but take that zone all the way back, and you can see that, hey, it was some pretty solid resistance in the past that turned support, turned resistance again yesterday. Now we're breaking above it. So if we see that zone hold on up, again, we have our main target, which would be filling this daily gap to the long side on Amazon. But I'm like, there's got to be a few other pit stops along the way up. It's not like we're going to go straight from 141 into the 144s without having some other profit-taking levels. Where would that be? I'm going to say it's going to be right there. Would be a good first price target. That's going to put you between 142.28 and 142.54 there on Amazon. So that would be your first price target to the long side if we do hold this zone on up and get that continuation push today. Your first overhead area of resistance is between 142.28 and 142.54. Then you would be targeting that daily gap up between 143.62 and 144.52 here on Amazon today, brother man. So that's going to be the breakdown on Amazon. Couple different trade ideas and trade plans established. You got one to the long side, got one to the short side, and then you have a second one to the long side as well if we get that full-blown pullback into the 139.50s on Amazon. So you got three different ways that this gets set up, three different plans in place. Now you just got to sit back and wait and see which one provides the opportunity, if any. And that's the thing. I get so much hate. It's like, oh, so you basically you're saying it's 50-50. You're saying, like, there's a good long and a good short. You don't know what you're talking about. Well, that's not knowing what I'm not talking about. That's me coming in unbiased, right? Like, I'm not so biased to the long side to where I'm not going to get prepared to the short side just in case. I'm very neutral right down the middle. There is great long opportunity, depending on how it sets up. There is great short opportunity, depending on how it sets up. We get as prepared as possible in the morning and then just wait and see how it sets up. I don't care if it wants to rip 2 points to the upside or drop 2 points to the downside. I could care less which way it wants to go. I just want to be on the right side of the trade. I don't come in with bias. I come in neutral. Is there good long opportunity? There is. But is there also good short opportunity? Absolutely. And depending on which opportunity presents itself, I just want to find myself on the right side of the trade. This is strategically coming in, getting prepared, removing the bias, and you can see just how crucial removing bias is. You find yourself on the right side of the trade more often, you pass up on subpar opportunities, and you make more money. So, again, come in with no bias whatsoever. If you see great long and short opportunity, build your plans and just wait for one to become validated, and then simply react and execute and take that trade and make some money. All right, do we have anything else that you guys want reviewed? Brandon, how you moving the needle today, brother? Starting to move the needle with Top Step, kind of getting some things set up. Awesome. I like it. Got all the tools in the toolbox. Going pretty good? Awesome, man. Good. Yeah, minimum 3 to start, at least for the first week or two. Just minimum of 3. That's going to make sure the trades that we're taking are like the best of the best, and we pass up on subpar for now. That's awesome. So at least there's no cons. Yeah, there's only some positives here. Yep. Yeah, a little bit of a learning curve, probably a couple of days of just playing around on that demo, but then you'll be like, oh yeah, this is simple. Right click the chart, buy and sell, stops. Yeah. I'm excited for you, man. Some good progress. And I was even thinking after yesterday's call, I'm going to try and hit up Corey and see if Corey's schedule currently allows for some maybe like private call one-on-ones. See if we can convince him. He loves futures. He trades futures more than me, ES, NQ, the micros. And so I think maybe just a quick session with Corey at some point, just solely talking about futures, could be really beneficial to you, to really help, you know, just learn a few new different tips and tricks. You know, he uses fibs as well. So maybe that'll just help kind of speed up the process efficiently as well. So we'll hit up Corey at some point and see if he's ever got some time. I'm putting him on the spot right now. I don't even think he's here. But if not, I still would like to have another call with you to discuss futures. But I think Corey would be a better fit. So. He's around. Well, I'll hit you up later this afternoon, Corey, and discuss and see if we can't, you know, work something out there like we did with Chris. So it'll be good. All right, Brandon. Well, awesome, man. I'm glad to hear that you're moving the needle. You're progressing. You feel pretty good about this transition. It's going to be a good transition to really make this a little bit less challenging. So, yeah, man, I'm really excited to see how this goes for you. Yeah, Q's already smacking that zone, so we just got to see how price reacts at the open if we see it pull back into that zone. The SPY, we still have a lot of that resistance up here between 435.85 and 435.90. And so, to be completely honest with you, 30 minutes ago, I'm like, it's the Qs, not the SPY. Now that I'm looking at both the SPY and the Qs, I'm like, you know, I want to put some focus on the SPY now because the SPY is much closer to that line in the sand than where it was, and the Qs are already above that zone. So I actually want to kind of shift a little bit and pivot here at the open and actually be watching the SPY up at that line in the sand and still look at the Qs to see how we react and how we move at that downtrend that we just broke. And at that key zone of resistance that could turn support. Still do not want to take my focus away from the Qs, but now the SPY is at a much better location that gets me more interested. So yay, Tim! We're watching the SPY now at the start of the day. Let's go. How you doing, man? Good morning, good morning. Good morning. You sound like you're in a good mood today. Oh, gotcha. Gotcha. Conference call right at 9:30. Come on now. We'll attack this day, brother. Who else? Kevin. What's up, brother? Is there anything that you're looking at that we have yet to discuss just to give you some more clarity here? Good morning, man. That 61.8 fib, I see, yeah. I like it. Yeah, I think that's smart, man. I love the downtrend, a little bit of a different trend line. But again, trend lines are so subjective. I mean, your trend line is validated. You got some confluence right there off that 61.8 fib, which is phenomenal. You got 2 solid reasons to be looking for some possible puts up there. Let's see if we find anything else, brother. But yeah. Oh, 100%. Yeah, absolutely. I mean, there's a lot of overhead resistance. I mean, we all know that. There is a lot. But let's just drill down to those lower time frames. And let's see how price actually reacts at these daily levels that you have identified. And let's see if we get some intraday, confirmation to play some puts here. But we're all set, brother. You need me, open that mic. We'll look at anything you need to look at. Make sure we get you guys super prepared, plans built, ready to attack this market and lock in some profits today. So we are live, ladies and gentlemen. Again, watching the cues at the start of the day, watching the SPY up at that line in the sand area. Same zone that we were looking at yesterday. Just curious to see how price moves and how price develops up at that zone. And then again, Apple at the start of the day as well, guys. There's Apple at that key zone. Let's see if we get a break and hold. That could give us the confirmation for that continuation move up through 180 into the 182s. NVIDIA actually may give me an opportunity for puts here today. That would look great. Got lows on watch, Datadog on watch. So again, right now, just kind of sitting back in observation mode. We got Apple. Has a lot of great opportunity at the start of the day. NVIDIA's coming on up close to my 463 area, where I'm considering looking for some puts. Depends on how we set up. And yeah, Datadog. See if we ever get an opportunity to play this long for the daily gap. But for now, just going to be looking at the good old SPY here. Watching QQQ as well, and we'll see what we have. All right, if you guys are on YouTube, hopefully you guys enjoyed today's pre-market rundown session, taking this time to get you guys prepared for the day, my game plans, my analysis, my breakdown. Hopefully this helps you come in a little bit more confident, a little bit more clarity, and be able to attack this market strategically and lock in some profits. But have a safe trading day. Be smart, trade safe. We'll see you guys back here tomorrow morning, 8:30 here on YouTube for the pre-market rundown. Peace out and take care, guys.